In this video, we'll be going over Worksheet 2 from IRS Publication 536. This is the worksheet to figure your net operating loss carryover from one tax year to the next. So this is for, in this case, 2023 to 2024 for a net operating loss carry forward from a year prior to 2018. So you shouldn't use this worksheet for NOL carry forwards from 2018, 19, or 20. So we're going to have to pull some of this information from a variety of different places on your tax return. But basically what we're doing is our primary purpose is to figure out how much of our net operating loss we can carry over from this year to next year. So let's just, and you know, the answer on this worksheet is not necessarily at the bottom. It's actually right here, so you can kind of see for yourself where we end up. The purpose of this video is to kind of based on a listener request, is to kind of walk through each step of these calculations so that we can kind of clearly understand where we're coming from. So I've kind of gone through this, put some numbers in here. This is not based on a real life case study or anything like that. This is kind of just walking through this based on my interpretation of the instructions in the publication, as well as the instructions on all the different forms and schedules that we have. So what we need to do is succinctly refigure our income with and without the net operating loss, making adjustments to either the adjustments to income or deductions from AGI, so on and so forth. So once we do that, then we'll have a new modified taxable income, and then we'll apply that to our net operating loss to see exactly how much of that we would be carrying over to future years. So let's go ahead and start at the top. In this case, we have a net operating loss that's been carried over of $10,000 to the 2023 tax return. This would appear on Schedule 1, line 8A. So let's imagine that we're carrying over a $10,000 loss. We're going to run all of this through to see if there's any of this loss that's going to be carried forward to 2024. So again, you know, the timing of this video is in 2024, but what we mean is the carryover to the 2024 tax year, which would appear on your tax returns when you're filing them in 2025. So in line 2, we're going to enter the taxable income without the net operating loss deduction for 2023. So if there was a net operating loss for, you know, that was prior to 2023, then we can go ahead and include that. Let's just say that the taxable income was $80,000 for our hero, John Doe. And again, our NOL year, we're going to put that at the top. We're referring to 2023. So in line 3, we're going to enter as a positive number any net capital loss deduction. So you would probably find, you would find that on Schedule D. So in this case, let's just say that we had $3,000 of a net capital loss deduction. We're going to put that in there. Any positive number that, as a positive number, any gain that we excluded on the sale or the exchange of qualified small business stock. So this is known as QSB or Section 1202 exclusion. You would find this on IRS Form 8949 marked with the code Q if this applies to you. It might also appear on either Schedule D or IRS Form 6252 if it was part of an installment sale. And again, all of these forms and schedules that I'm referencing, we'll put links to those resources in the show notes for you. In line 5, we're going to enter as a positive number any qualified business income or QBI deduction. You would find this on IRS Form 8995 or 8995-A. And then finally, line 6, we would enter any adjustments to AGI. So these are what used to be known as above the line deductions. These would be mostly deductions that you would find reported on Schedule 1. So in order, we would need to recalculate based on AGI the following. So special allowance for passive activity losses from rental real estate activities. 2, taxable Social Security benefits. 3, IRA deductions. 4, any excluded savings bond interest. This would normally be reported on IRS Form 8815. 5, excludable employer provided adoption benefits. We'll put the link to that in the show notes. I believe the form eludes me on the top of my head, but there's a specific adoption expenses tax form. And then finally, the student loan interest deduction, which would be reported directly on Schedule 1. So you would find that reported to you on your Form 1098. So basically what we're going to do is if none of those are applicable, you would just enter 0 here and move about smartly. But what you would need to do is increase the AGI by the net capital loss deduction, this gain excluded on the sale or exchange of small business stock, and then the QBI deduction. You increase the AGI based on that and any NOL deduction for the 2023 tax year. From there, we would then recalculate the items that I just mentioned, the special allowance for passive activity loss, taxable Social Security benefits, IRA deductions, excluded savings bond interest, excludable employer provided adoption benefits, and the student loan interest deduction. You would recalculate those based on the increased AGI. You would combine all of these adjustments and put that total amount in line 6. So for brevity's sake, let's just say we did all of those calculations offline, and that resulted in a net increase adjustment of $5,000. Now line 7 and line 8 and 9, we technically shouldn't know that right now. We're going to have to pull information after we've made adjustments to our itemized deductions. So for the time being, we're going to skip these last 3 and we're going to go to line 10. So you can use this if you're filing IRS Form 1041. So estates and trusts would have different reporting lines on your schedules, but items 10 through 12 are for individual taxpayers only. So we're going to make adjustments to the AGI based on the instructions here. And then once we have the modified AGI, we're then going to go recalculate certain itemized deductions that would be applicable or that would be possibly impacted by the change in AGI. Now, if you didn't have any itemized deductions, if you took the standard deduction, you can take a shortcut and just hit 0 on this and on line 7 up here, and then continue smartly here. We'll walk through that at the end of the video, but let's go ahead first and walk through these itemized deductions. So let's imagine that our taxpayers had an AGI of $120,000. We're now going to combine lines 3, 4, and 6. So again, the net capital loss deduction, the excluded gain on the qualified small business stock, and then the adjustments to AGI. So the combined total of that is $28,000. We're going to combine those two, and now we have a new modified AGI of $148,000. We're going to use that number to recalculate our Schedule A deductions for medical expenses, charitable contributions, and casualty and theft loss, because they're all subject to either a floor or a limitation based on AGI. So let's start with the medical expenses first. We're going to take the line 4 item of Schedule A, which is the net medical expense deduction after the AGI limitation. So let's say that line 1 is the AGI adjustment before the limitation, and John Doe had $15,000 worth of medical expenses. He applies the under the normal circumstances, he would apply the 7.5% floor based on his $120,000. That results in a $9,000, that has to come off of his deductions. So his deductible medical expenses is only $6,000. Now we're going to decrease that, because obviously when his AGI goes up, then that AGI floor, that 7.5%, will also go up, meaning that his actual allowable deduction for medical expenses will go down. So we're going to multiply line 12, this 148,000, by that same 7.5%. So instead of the AGI floor being $9,000, it's now $11,100. And then the math on this is kind of different from what is calculating in my head, but the formula works the same. So we're going to subtract the $11,100 from the $15,000. That leaves us a $3,900 deduction that we're now allowed to claim. But the adjustment on that is $2,100. So we have to subtract the $3,900 from the $6,000. We get $2,100. So now we're going to do the same for charitable contributions. Because there are so many AGI adjustments, for the purpose of this case study, I simply said, hey, let's imagine that they had $20,000 worth of charitable contributions. When I refer to IRS publication 536, it says if your charitable contributions are 20% of your AGI or less, don't worry about any limitations. So this was clearly less than the old AGI, and it's clearly less than the new than 20% of the old AGI. It's clearly less than 20% of the new AGI. So there is no new limitation to the charitable contributions. So it is. There is a note in the instructions, because you might be able to claim a larger charitable contribution here. So let's imagine that you were only able to claim $20,000, but after you recalculated this, you're able to claim $25,000. You're actually able to claim a larger charitable contribution because you have a larger AGI ceiling in this case. And if you have a charitable contribution carryover, because some of your charitable contributions were disallowed in the current year, let's say you had $30,000 of charitable contributions and you originally had a $10,000 carryover. Well, when I bump this up to $25,000, you need to reduce that charitable contribution carryover by $5,000, so you're not exceeding the original contribution amount. So you have to be aware, or at least cognizant, that adjustments in one part of your tax return could have a ripple effect. So this video is kind of walking through the different ripple effects we might have just on our Schedule A. And finally, there's an AGI floor when it comes to casualty and theft losses. So let's imagine that we had a total of $30,000 of a casualty and theft loss. This is after the $100 silly deduction and certain various calculations. We come up with $30,000, and then the next couple of lines are the adjustments based on that 10% AGI floor. So before that AGI floor, line 16 was $30,000. After applying that 10% floor, which is $12,000, we have a deductible amount of $18,000. We're now going to recalculate basically that AGI floor. So what we do is we multiply the line 12 amount, and the AGI floor is no longer $12,000. It's now $14,800. So we need to adjust how much of this we can take. So when we subtract the $14,800, we're not left with an $18,000 deduction. We're now left with a $15,200 deduction, which means there is a net adjustment of $2,800. So for line 26, we're going to take all of these adjustments that were on line 17, line 20, and line 25, and we're going to combine them. That's how we get to $4,900. And we're going to bring that item back up here. So $4,900 is the total adjustments to itemized deductions based on those calculations. So in line 7, if you, like I said, if you claim the standard deduction, this would be a 0. We'll walk through that briefly. But actually, well, it says technically in the instructions that you would enter 0 if you claim the standard deduction and lines 3 through 5 were also 0. Otherwise, you would still need to complete lines 10 through 26. So we'll go back and kind of figure this out with a 0 deduction, how that might work. So we're going to combine lines 2 through 7. Enter the result. So I don't know why okay. So the total that we arrive at for this is $117,900. So obviously that's bigger than the $10,000. We would not have a net carryover to the next tax year. So, but you know, if this were say 150,000, then we would have to redo, we would go through all of these. This may be different. I don't see how it would be. And then we would just, have some adjustment to that NOL carryover to next year. So that's basically how we would walk through this worksheet. You do need to make sure, kind of keep in mind that anytime you're operating with multiple deductions that involve a carryover, if you increase the carryover amount on one side, you may have to decrease it on the other side. For example, increasing your net operating loss carryover, you know, does have a ripple effect on your charitable contribution deduction carryover. So, as I mentioned, we'll put links in the show notes to the resources we created for all the forms and schedules mentioned here. And if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions, and I'm sure you might based on this video, please hit me up in the comments section. I look forward to researching and getting back to you. So thank you very much and have a great day.